Hey everybody, Greg here. Before we take a look at the broader markets, which are holding up, continue to hold up well after yesterday's rally, I wanted to show you a trade Dan picked and decided to use options for. And why not always use options? Because they're not always liquid, and they could be a very spready. But this was in a nice uptrend, as you can see, 20 above 50, both of them advancing. And this is something that we covered in the coaching session the other day, looking for small candle bodies. So you can have small or narrow range candles, right? Well, that one's relatively narrow compared to that, but it's messy. It's inside bar there. And you can see it kind of rattles around and then it ignites here. And then that's a small candle body, narrow range, 1, 2, 3 pattern right there. But it was picked here as it was going sideways. And notice the red bar, which turns out to be ignored. And then the retest of this pivot, which becomes a pivot on this day because you needed 3 bars to the right. 1, 2, 3, actually. So, yeah, it was there. So that retests it, and intraday, there must have been obviously sellers because there was a topping tail bar. And then the bodies continue to be small. So when you're looking at this, what you're seeing is that it's just kind of going sideways. And it, moved down and moved back up, and it's just chopping sideways at resistance, which is bullish price action, even though it's not moving yet. So then when it started to move, he picked the $59 calls expiring next week, which we can look at here, and we can plot them. Let's see down here. And so that plots the price moving of the option moving it. And you can see the price of the option down here. And I'll just show you the tracking sheet and get it in here. We can see if we can take a look at that there. I have to scrunch it up a little bit. Sorry about that. To fit it in here where we're looking. And we find eBay, the September 20 $59 calls. And there is the commentary. Slide that over a little bit so you can see it. So $59 calls bought for $1.95, and gives a little explanation as to why. Breakout daily, weekly, and then some profits were taken, and then holding on to the back half, looking for it to move up. And so you see where it is now, and the price of those options are at $5.35. So a nice gain there. Getting a wide range bar, and let's just move this over a little bit. See it's starting to stall a bit on the 5-minute chart where it retested that pivot. So when you get a pivot that forms and it's retested, we anticipate that sellers will show up there. It doesn't mean it's going to violate the trend, but this wide range bar has now created a void. And you can see as that moved up so sharply. And so there's going to be some profit taking. And now we'll see how it holds up here, what it's going to do. We look to the left, of course, and say, is there any overhead resistance? That green line there is the strike of the options that were purchased. So when they were purchased, they were in the money. So they're going to move with the stock pretty well. And there's really not a lot to the left there. So as long as the markets continue to hold up, I mean, this might pull in here a little bit. And of course, with options, you can get that time decay, but these are going to expire next week. So we do have some time there. We'll see how that goes. The markets really, really kind of wacky, coming down like they did I explained yesterday, not yesterday, pre-market this morning, about yesterday coming down to that low. And, how it came down was very aggressive. You see it just collapse, and then to come back like this so sharply without little to no pullback. And now today there was this long consolidation, and it's up again. And these 5,600 strikes were the highest volume strikes, and they tend to go to that highest volume strike. It's something that happens on many days. Whatever, as prices are trending up, if you look at the volume in the strikes and you find the one that's the highest, there's a tendency for it to gravitate toward there. So now that it's reached that 5,900, that whole number, it's probably going to stall. and it's up quite a bit. So common sense would say it's likely to stall anyway, being at that whole number. And it is coming up into this resistance area there. So keep an eye on that. It may come down. It's as fast as it went down and came back up, it could come right back down again. Don't know if that'll happen, but you know, you always got to be thinking, in markets that have that kind of personality in the moment, it's a possibility. Well, the Qs are coming up to resistance as well, and as it comes up into a stiff area of resistance, the probability of it stalling there increase quite a bit. Uh, the diamonds, giant bottoming tail bar yesterday, and that's moving up, coming up into pivots as well. Uh, Semiconductors bringing up the rear. Talked about that yesterday pre-market. These patterns, stabilizing here, and possibly they start lifting up. This morning we discussed retailing, which was down at support and had that bottoming tail bar. So they are starting to work out as well. And the others that bringing up the rear were, and maybe to a little bit of a lesser extent, but crude oil was down at the bottom of the weekly trading range that we covered pre-market this morning. So some rotation into the laggards is going on here. And we'll see how this unfolds. As always, if you have questions, email us, Greg and Dan at Master Trader.